Good morning, good afternoon, good evening, and thank you for joining us from wherever you are in the world. We really appreciate you spending the next hour or so with us as we introduce you to the team of simple.Capital and their investment bundle for Q3. Joining us tonight is Scott Picken from the Global Wealth Group, the team from simple.Capital, Aisha, who is one of the founding members of one of the partners in the investment bundle. And during the course of the webinar, we will also be joined by John from Plentify. So we look forward to a very engaged and powerful webinar tonight as the team takes you through this opportunity. But just some information around the webinar. Sorry, the word escaped me, is we love your engagement during the webinar, so please talk to us in the chat box as we go along. We love seeing your input. But if we could ask, as we do have a pretty big panelist team here tonight, that you post your questions in the Q&A box. It will allow our panelists to go through it, and I can ensure that the majority, if not all of them, are answered by the people who are online with us tonight. So without further ado, I'm going to hand you over to Scott.
Awesome. Thanks so much, Lee, and really appreciate you putting this together. So I want to take everyone on a little journey, and I want to welcome them on this journey. And I take you back to 2017. I'm sitting in a game farm in the middle of Gauteng somewhere, and I bump into this guy who's introduced to me as an expert in exponential technologies. And it was really interesting because it was a Saturday, and he had sort of kind of almost against his will been invited along to a board meeting of ours, a strategic meeting. And I think the day that I met this gentleman, it was like, wow, really interesting what he's been doing, being a partner at Deloitte's, really specializing in exponential technologies, having gone to Singularity University, brought Singularity University out to South Africa, tried to, or even attempted to, or did get into space. And for me, it was really awesome to meet someone in South Africa that actually had done a lot of the stuff that I was trying to do and learn about, both at an individual level and at a company level. And so I was absolutely fascinated to meet Willem and to understand what he was doing and to really watch his journey over the last 4 years in terms of his growth and the development of simple.Capital. Then I'm not sure exactly when it was, but he started talking to me about Tim Willis. And he said, this guy used to be the ex-CEO of Uber Southern Africa, and you really got to meet him. He knows how to build exponential businesses. He's been there, done that, got the t-shirt. And more recently, he's gone out with I'm not going to get it exactly right, but aerobotics, and Willem keeps telling us of all the wonderful stories. And really, in simple terms, we were very lucky to have Willem join our board last year, and really kind of start to give us guidance in terms of exponential growth, where the world is going, strategic partnerships, funding, etc. And Willem's been talking very highly of Tim and everything that they've been doing at simple.Capital. And so from our perspective, we're always intrigued. As a group of investors around the world, we're always looking to offer people not only access to the best information, but there's no point in having the information without being able to take action. And so what we wanted to do tonight was, it was a little bit impromptu. In the future, we would love these things to be on our platform and have gone through all the proper processes and everything else. But there was a fairly unique opportunity. I was chatting to Willem last week. He said, look, we've got a unique opportunity. We'd like to share it with your community. And so we sprung to action to put a webinar together. And what I'm intrigued by tonight is that no one from our team actually knows what they're going to talk about. So we are here as participants as much as everyone else is. However, I believe there is a really trusted relationship with yourself, specifically, Willem, not only with our team at the Global Wealth Group, but also with our whole community. You and I have traveled the world. We've done presentations in New York, London, Dubai, South Africa, you name it. We've been doing presentations for the best part of 3 or 4 years. And I think one of the things that I've been overwhelmed by, no matter where we go in the world, no matter what language or type of country that we're dealing with, people have been fascinated by your grasp and understanding of exponential technology. And what I'm super excited to do now is to hand over to you, because you've been teaching us about the theory of exponential technologies. But as I understand it with simple.Capital, it's now about looking at simple exponential investments. And without further ado, I want to hand over to you and Tim. And as I said, welcome everyone else on this journey to learn from you guys. And the one thing that I have held them to a commitment on is that this will not be the last webinar this year, because there's plenty more information that I want to extract out of their head and value that I want to deliver to the community. But without further ado, over to you, Willem and Tim.
Scott, thank you. Lee, thank you. Firstly, for your nimbleness in pulling tonight together on short notice. In the venture capital space, windows of opportunity are small, and lack of nimbleness causes loss of opportunity. So sincerely, thank you from everyone at Simple Capital. And then Scott, a very specific thank you. If I ever am going to be in a situation where I have to be introduced to a potential mother-in-law, there's only one guy that can introduce me, and that is you. It was a very flattering introduction. Thank you so much. And thank you for having us, and also to the community. Good evening, if it's evening where you are. I know we're talking to a global audience. Tim and I are passionate about exponential technology investment, exponential organization investment as well. And tonight we're going to talk about a bundle that Simple Capital has put together of, in fact, 4 of those special types of organizations into which there is a small window of investment opportunity. And so, Tim, perhaps just a quick hello from you as well. You and I worked together at Deloitte. You then went through your rounds at Uber and Aerobotics, and then we co-founded Simple Capital last year, just primarily, Scott, because venture capital is a misnomer. It's hard to get access to these deals if you're not in that fraternity. They're normally quite expensive to get into. It takes a very specific skill set to understand if it's a good or a bad deal. And typically you're exposed to a single deal if you are a private investor, which hinges on one investment working or not. And so Tim is going to talk a little bit about some of the value proposition of Simple Capital. For everyone's benefit of planning time tonight, let's just quickly have a look at what we're going to cover with you. We'll do this really quickly, and it'll come up on screen in a sec. Any sec, there we go. All right, so there, Scott did the welcome. And again, thanks for the warm welcome. We're going to quickly tell you about what Simple Capital is as the partner that provides the access and the railway into the world of venture capital. We'll introduce the 4 companies, 2 of whom we actually have the founders here this evening, which is a rare thing. Scott, let me just say, if the CEO of Anglo American takes the night out to talk to investors or do a webinar, Anglo American powers on. When Aisha stops her business to be with us here tonight, someone's got to pick up that slack tomorrow. And so it is extremely valuable to have 2 of these founders here this evening. And so Isha, welcome and thank you. And also to John when he joins a little bit later, same courtesy. It's an exceptional thing to have 2 of these founders here this evening. All right, then we're going to talk a little bit about how the instrument works to get into these deals. What does it mean? What are the terms? Things that the savvy investors would want. And then we also will have a Q&A or an AMA, ask me anything, in brief succession at the individual intersections of tonight, and then also an umbrella moment at the end before we close out. Having said all of this excitement and all of the opportunity, and we're brimming tonight, there are disclaimers. And so we've got to have 2 of these. The first is I must disclose, and I want to disclose, that I am a board member of the Global Wealth Group, as Scott had mentioned, but I'm also the the executive chairman of Simple Capital. And so we wanted to make sure that everyone is aware of that. I do have these 2 vested interests. Scott and team have not vetted this investment bundle. It's not theirs. And they don't express an opinion on this. We are not an approved sponsor of GWG. And none of its subsidiary or internal marketplaces are participating in this deal. And you can see this disclaimer. From a regulatory perspective, we want to play clean and make sure that you are aware of these. Okay, then the guy whose everyone's voice has been waiting to hear is Tim Willis. He's got the next one for us just to take us through the next bit of formality. Tim, let me hand over to you. Hello, nice to see you again. You're on mute. That's the most used phrase in the last 18 months of the world. You are on mute.
Right. You should be able to hear me now. I was just following the rules. But Thanks very much for the introduction, Willem and Scott. So I think very simply, the investment vehicle that houses this bundle sits in the UK, and we need anyone who invests to be a self-certified, a sophisticated investor. So I suppose the question becomes, how do I become a self-certified and sophisticated investor? There's kind of four main things that you need to look at, and it's an or, not an and. So if you fulfill any of these requirements, you're considered a sophisticated investor. The first one is that you're a member of a network or syndicate of business angels. The second one is that you've made an unlisted investment in the last 2 years. The third one is that you work as part of your professional capacity in the private equity sector. And then or you provide finance to small and medium enterprises. And the final one is that you're a director of a company with an annual turnover of more than £1 million in the last 2 years. So if you fulfill any of those requirements, you would be considered a sophisticated investor, and we would ask you to self-certify on investing into the bundle. It must be noted that because we as Simple Capital rely on this self-certification and we only allow sophisticated investors to invest in our bundles, we're not regulated in South Africa, obviously, because this is a UK investment vehicle. And secondly, we sit outside the scope of the UK regulator, the FSCA. And then, and finally, obviously, venture capital carries risks. It also carries high returns, but you need to just be aware of those risks when making an investment. Great, thanks, Willem.
Okay, thank you, Tim. Ladies and gentlemen, that is the formal part, and I kept a close eye on our participant numbers for tonight, and I was wanting to see if someone is dropping off when we start throwing out disclaimers. Thank you for sticking through that, and now we can get into the sexy part of this evening. All right, so first off, we want to introduce you to Simple Capital because it is a new partner of Global Wealth Group. We are in the beginning stages of this journey. And essentially what Simple Capital does is that it's got a variety of legs to it. And the first is early stage investment vehicles, typically, as you had heard in the previous two depictions, for high net worth individuals and family offices. We also have corporate clients. And what we do is we help these corporate clients with investment into exponential technology opportunity sets. And you would have heard me talk in previous Wealth Migrate and Private Wealth Endeavor, where we speak of things like, you'll remember, nanotech, 3D printing, digital biology, and some such. And a lot of our corporate clients, which include listed clients, are making investments into those spaces. But of course, their business is their core business. And this is ancillary to that business, and they look for experts to help them. And that then represents an opportunity where Simple Capital plays for those corporates. And then the thing that I'm hoping Aisha will mention a little bit later is that in addition to being the sourcer of investment and facilitator of investment, we also inject some of our own talent as Simple Capital into these underlying organizations that we invest in where needed. Whether that is operational help or financial help, neither here nor there, but we do play an active role in our underlying investments. And as we're exposing this world, which is often perceived as opaque, of venture capital to the likes of an audience tonight, I'll give you one of the sort of golden ratios that's bandied about the likes of Silicon Valley and Tel Aviv and Amsterdam. It's the rule of 100-10-1. 100 people talk about starting a business. 10 actually do start a business. 1 of the 10 normally is successful. And with our interesting metrics as to why 9 of the 10 fail, in that 7 of them fail for the same reason. And we'll expose a little bit of that as we build this journey with you and the Private Wealth Group and the Global Wealth Group, in fact, as to how to mitigate for that. The world of VC typically returns upwards of 40% annual returns. And that, of course, as an average means that some are doing 0 and some are doing 80. And if 110-1 is the ratio, and you can take your 1 to 2, you're in the 80 zone. If you take your 1 to 3, it starts to look really exponential. And a part of our mission, I suppose, is to bring that to bear and democratize this world of venture capital. Okay, but Tim, quickly, if you just perhaps dive a little bit deeper into our value proposition and who our team is, because nothing happens without a great team, right?
Yeah, that's right, Willem. And I think that, you know, what we plan to do, or what we aim to do, is to make, you know, venture capital more accessible to individuals. And so I'll talk a little bit about how we do that. So firstly, we are scouring the globe. We have a sourcing team that is active, you know, around the world. We have folks in 23 hotspots or hubs, tech hubs around the world, who are looking for the best investment opportunities and bringing them out. And we're very clear on like what we're looking for and what we believe will be good potential investments for our investors. Once we obtain those opportunities, we perform due diligence and bring an investment committee structure. So there's a lot of focus in terms of how we do that. And then finally, on behalf of our investors, we negotiate legal and commercial deal terms, which can obviously or often take a lot of time. So we go through those steps on the investor's behalf, and we allow, you know, investors to invest at a very affordable rate. So you can invest anything from $1,000 in an increments of $1,000 above, and you're getting a diversified investment bundle. So you're getting diversified interest, which is critical when you're investing in these types of investments. And we're doing all the heavy lifting behind the scenes to make sure that what you're getting is really good and valuable. Once we've done that, we manage and mentor the investment portfolio. So as Willem alluded to, when we make an investment, we're active investors. We try and help. We get involved where appropriate and where called upon. We keep everyone who's invested updated with what's happening. So usually on a quarterly basis, we send out an update and let everyone know how the businesses are doing. And then when it comes to it, we help and prepare and manage exit opportunities for our investee companies. And that's obviously when the liquidity returns to the investors who've made those investments. So I think that's where we sit and bring value to the opportunities that we find and value to our investors. Lastly, we've got quite a high expertise team that we've assembled to do this. So it's not just Willem and myself. We've also got Blake, who you'll meet tonight, who's our Chief Investment Officer, as well as a number of folks who are working across due diligence, legal, and sourcing. So making sure that we're finding the best opportunities and bringing them through to these communities as quickly as possible.
Okay, Tim, so this is left field, but I'm going to ask you to go back one slide because there's one icon that I don't understand. I don't know why we have a UFO as a picture under the reporting part. And who put that in and why is that?
Because we consider it to be the mothership. So once you invest in the mothership, you then get reporting to the mothership.
Okay, all right, I can buy that. That makes sense. Tim, and then in terms of that team, obviously, I'll just add one note. You know, a guy like Daniel, who's head of investment portfolio team, Daniel's got a network of people, as you had alluded to, that sits everywhere from Texas, the East Coast, Silicon Valley itself, Spain, Tel Aviv, and the deal sourcing is global. So it's quite a unique proposition to have a RAND-based cost structure associated with the scouring of the globe that still has a global reach. And so, yeah, like you say, it's not the two of us, it's not the 8 or 7 of us on the slide, it's actually an entire network of people that sit behind this endeavor. All right, ladies and gents, if this were a live webinar, a live session in a venue, I would stop and pause for questions. But we're going to give you question opportunities after each of these companies that we're going to introduce you to. As I had mentioned, we're lucky enough to have 2 founders here tonight with us live. And the first is Aisha from SweepSouth. And Aisha, welcome. Nice to see you. I know that you cut through traffic to get to a position of connectivity, and so thank you for making it. It is quite a thing to orchestrate a session like this in production, and so thank you very much for joining us this evening, and welcome. Nice to see you again.
Good to see you too, Willem. Thanks for having me.
Aisha, normally you and I chat for 40 minutes. Tonight we've got 4 companies to cover, so we're going to do this in a much more truncated fashion. I wanted to give everyone on the call an overview of what SweepSouth is, who the team that in there, and some of the exciting metrics as to why we think that you are an exponential organization. So let's start off with the company. Tell us a little bit about SweepSouth and what it does.
Sure. So SweepSouth is South Africa and Africa's first online home services platform. We launched 7 years ago with myself and my co-founder, who is our CTO. And when we launched, our mission was really to use technology to make the process of finding home services and the experience of being at home a happy one. Our own experience was that, trying to find someone to step in temporarily to help with things at home when our domestic worker nanny was going to be away took almost 6 weeks and a lot of pulling hair, because the process was offline. There were, phone calls that had to be made, emails sent, a lot of interviews. And what we're essentially doing is we've used technology, and a good analogy that we use is sort of the Uber for home services. But we've used technology to deliver people who are screened, who are vetted to customers directly. So cut all of the hassle out of finding and connecting with and managing home services. And I think it's important to also say that core to our mission is also helping to drive work opportunities amongst the service providers who work through our platform under dignified conditions and at equitable rates. So we pay more than what the market outside of our platform is paying for these services as well. The platform consists of, we have 2 different types of services that we offer. The one is our home and garden, which is a sort of high recurring rate service, which is the difference between SweepSouth and Uber, as an example, because customers are using us on an ongoing basis. We're in a great position as a platform where we have around 60% of our bookings being recurring bookings. So customers who've signed up for a subscription, long-term relationship with the platform. And then we also have a marketplace, which is a broader range of services, things like electricians, plumbers, handymen. So a very broad range of services that you might use, once or for every once in a while, but will be a higher basket size, a higher ticket item. And they complement each other really nicely from a growth point of view. Over the last 7 years, so we launched out of Johannesburg in South Africa. Our headquarters are now in Cape Town, which is a great place to grow a tech business. It helps us attract great talent, which I know we'll talk about it a little bit just now. And we've grown SweepSouth from, again, a small sort of founder-run launched business to now operating in South Africa in 5 cities. We are live in Kenya. So we operate out of Nairobi in Kenya, really great growth in that market. We're just about to launch in Nigeria and are looking at a very exciting opportunity in North America. So the acquisition of a very similar business that's based there. And that'll put us on all of the 4 cardinal points in Africa, and have SweepSouth being a truly pan-African business by the end of the year. And we're fundraising to fuel all of these really exciting growth plans.
Aisha, that's fantastic. I want to invite everyone on the platform, if they haven't already done so, to try out SweepSouth. And of course, December is around the corner when perhaps you might be on holiday in a different home, still needing a trustworthy person to do some of the domestic services. And so what a wonderful way to find someone on this platform. And I like the part of trust specifically. It's not just a platform that is a handshake, take your money and your service fee and then run off. It actually aims to, as you said, dignitely serve the worker, who you call sweep
stars.
That's it, sweep stars, whilst at the same time providing the trust element for the homeowner. Okay, and you've touched on this slightly. You've recently endeavored on an acquisition trail.
That's right. Yeah. So, we are wanting to expand aggressively across the continent. The company's at a real inflection point where we've operationalized extremely well in our core market and are now in a position to export that to additional markets. And so what we're doing is expansion via either greenfields. So what we've done in Kenya, and we've had again, really great growth there. So last 2 months or so, over 20% month-on-month growth. We're in the middle of hiring an additional person there. We've got 3 developers who are based in Kenya. And then we'll do the same thing in Nigeria, but where there are these really interesting synergistic opportunities to expand via acquisition, we will certainly look at that, and that's what we're doing in Egypt.
Fantastic. Now, at Simple Capital, as you know, we are not just interested in the business model. Of course, it is fundamental to everything. We're going to get into the financials in a second, but before we get there, we ask, who is the team? Because when the going gets tough, we want to know that we've got superstars that we are investing in. So talk to us a little bit about your team and tell the thing that I always ask you to tell.
So I don't know if that's that my husband is my co-founder and is our CTO. So we're in a very, very fortunate position, though, of having a co-founding team who, I think, Willem, when you talked about the stats behind businesses and why businesses fail, one of the leading reasons is because of co-founder splits. And then, funding sort of follows closely behind. But, we're in a lucky position to have co-founders who have complementary skills in terms of background. So my own background is I'm a science PhD, and then had worked with Accenture as a management consultant across a range of different projects in listed companies in telecoms and mining. And my co-founder, Alan, has had a almost 20-year history of building scalable technology at some big companies like IBM and Oracle and SAF Marine, but also some smaller startup companies over the last sort of 2 decades or so. And then the founding team is complemented by a team with a really strong background in the tech space across e-commerce, marketing, mobile communications, and technology. And so there's a broad range of experience. And when you said that, someone has to take the slack when a founder is doing a talk like this, yes, there certainly is going to be a bit of extra homework for me to catch up on. But I'm in the great position of having a very capable team who have, specific skill sets that they bring to the party. That means that we're sort of past that stage of the founders doing everything. So really great team. And, as a team, we have achieved and are achieving the sort of growth that I spoke about, both in terms of expansion. But I think also important to say that, we've made, as a team, returns for some of our early investors. So we had some early stage seed investors come in. They exited in 2019 with a 15x multiple on invested capital. And we're looking to provide even bigger returns to investors who come in now. And again, at a really great point for the business.
Okay, well, this is exactly the kind of window that we're talking about, is a company that's kind of pulled together the value proposition, have got the core team established, and now starts this aggressive expansion, which is really the democratization and the digitization part of our 6D journey that we so often talk about in the Exponentials world. And here we've got some actual and projected growth numbers that I'll ask you to talk to for a minute, just before we start to get ready for John.
Yeah, so our monthly GMV, which is our top line growth, is tracking at just over $600,000 per month at the moment. We're looking to grow that to just over $1 million by the end of the year. And that is through a split of the different geographies that we currently are present in and will be present in. So that's including the North African business. And then also across the different verticals. So I talked about the home and garden and the marketplace. And I think, again, just in a great position where we have de-risked the business to a degree in terms of the services and markets that we're in, so that even through the pandemic, where a person-to-person service like ours is operating, we're able to predict and project solid growth for the rest of the year.
Aisha, fantastic. That is a nutshell that I didn't think that we would fit into. We can talk about your business for a long time, but really, if we zoom out, an exponential opportunity of digital expansion across the globe in an organization that has a very pronounced and healthy purpose, in that it serves both sides of this marketplace. And so, Aisha, thank you very much for joining us this evening, albeit brief. I think you drove longer for how long this session was. But sincerely, thank you. Good luck with your endeavor of expansion. And, we look forward to doing that journey with you. Thanks for joining us this evening.
My pleasure. Thanks again for having me.
All right, ladies and gents of the audience, at this stage, we're going to switch gears and I'm going to introduce John from Plentify. What I will ask you to do just on the next slide, you'll see, in fact, on all of our slides, there's a QR code at the bottom, which you can hover your smartphone over, let the camera pick up that there is that code, and then it'll help you to join this community, because what we mentioned as we spoke of Daniel's team that sits globally and sources deals, this is a very exciting investment bundle and the first that we bring to this community of many. And so to plug into that understanding and flow, make sure that you scan this QR code and do get in touch with us as regards this bundle, but also then, of course, future bundles as we switch gears rapidly into Plentify. And John, good evening. Last time I saw you, we were in different rooms, so we looked at each other through cameras. But very nice to see you again. And just tell us, where in the world are you this evening?
Hi, Willem. It's great to be here. I'm in Cape Town this evening. I think the same as you.
In fact, not. I'm close to Lanseria. I'm only coming to Cape Town tomorrow. So
Okay.
We've got the tail end of the cold front. I'm actually sitting here with the heater on next to me. And you can't see it, it's off screen, but I did have a cup of coffee just to keep me warm.
Nice.
John, tell us quickly, what is Plentify? And share some of the excitement of this enterprise with us.
Yeah, sure, Willem. So at Plentify, what we're doing is we are adding intelligence to the appliances in people's homes, so those appliances can fix the grid and enable more clean energy. And to understand how this is even possible, it's important to understand some aspects of the energy market and how this world is evolving. In the past, it was all about, a utility's job has always been to match supply and demand. You have a certain amount of demand that ramps up and down during the day, and a utility's job was to turn the switches on and off on the supply side, turn power plants on and off effectively to match supply with demand at any given moment. As we progress into this world of clean energy, this energy transition that we're going through with trillions of dollars of investments into renewable energy and the mothballing of fossil fuel plants, the nature of the problem is changing. Utilities can no longer turn supply on and off as they used to. You can't turn the sun on and off. You can't turn the wind on and off. It supplies when it does. And so you need a different method of matching supply and demand. And we focus on the demand side. We focus on giving the appliances in your home intelligence to give you what you want while giving the grid what it needs, which effectively means, if you're talking about water heating as an example, give you as a user hot water when you want it, but don't draw power to heat that water when we're about to have load shedding, but rather draw it when there's excess solar available. And it's that layer of intelligence effectively that we're building to enable this future.
John, very much a topical issue today, alternative energy, the need to move away from dirty energy like coal-fired plants, and of course, adding an IoT or intelligence and automated functionality and feature set to a very strained, not only South African, where we are acutely aware of the Eskom problem, but global grid constraint issues. And so one of your products in this endeavor is Hotbot. What is that?
Yeah, I've got one right here. I can show it to you. This is Hotbot. This is a little IoT device that plugs onto your electric water heater in your home. And I mean, if you look inside the box, there's some pretty colors, which if there are questions about it, I can tell you more about it. But effectively what this device does is it connects your water heater. And to be clear, a water heater is that appliance in your home that heats and stores hot water for when you need it for showering, bathing, washing dishes, etc. So this thing connects to your water heater and it allows us to monitor how your hot water system is operating and control that system remotely. We then take all that data and we use that to decide when to turn your water heater on and off with a few goals in mind. Number one, give you hot water when you want it. Number two, use as little electricity as possible to heat that water. And number three, time the heating for when it makes the most sense for the grid. And it's in that timing where most of the magic lies, because we're not just, unlike other products out there, we're not optimizing a single water heater. We are optimizing fleets of water heaters. We are coordinating that John's water heater turns on at a different time to Willem's at a different time to Tim's, so that we are able not only to shift when these things draw power, but reshape the load curve into any shape we want. Flatten the curve, to use a horrible analogy, or reshape it to match solar generation, as an example. And this is a solution which has global applicability, and which is actually reflected in the customers that we are winning. There are this problem of mismatch between supply and demand, and the growing need for demand-side intelligence is facing utilities all over the world. And we're seeing massive demand from markets like the US, the UK, and even China.
So John, just on that point then, you're not selling this to consumers. You've got an enterprise model here, if my understanding is right. Talk us through that.
Yeah, absolutely, Willem. So you're perfectly correct that our customers are not our end users like you and I. Our customers are large B2B players with big fleets of water heaters under their control. And they fall into these four main verticals that you see on the screen here. It's utilities, property companies, solar and battery companies, and insurance companies. And for each of them, we have a slightly different value proposition that speaks to a specific problem which they are facing. So I'll maybe just pull out a couple to highlight. So utilities as an example. I've spoken a lot about the issues facing utilities. Effectively, what we're doing is we're creating virtual power plants for them. We're taking all these distributed energy assets and we're using software to connect them together and to behave like one cohesive unit that can then provide all the typical services that you would expect from a power plant, but for 5 to 10 times cheaper, because most of the infrastructure is already there. The water heaters are already in people's homes. We're just adding a relatively cheap piece of tech to it to harness its potential. On the other end of that slide, you have organizations like insurance companies. So here, this device can also detect almost anything that goes wrong with your water heater and then take remedial action. For example, it can detect when it springs a leak and then close a shutoff valve to prevent that leak from causing damage to your home. And that's really valuable to insurance companies because this resultant damage drives about half of building insurance claims, and we can almost entirely eliminate that.
It's almost preventative to avoid the claim of the insurer, which if there were too many would load the premiums, which means the consumer pays too much, or pays more rather. So some would argue too much. But John, what excited us from a Simple Capital perspective is that this is not B2C, because it will take forever to get this device and technology rolled out if you had individual consumers that you're trying to solicit. And if you've got clusters or municipalities, you can do en masse rollout really, really fast. And we liked that. And then our first question was, well, who is the team that's doing this? Because talking scale is one thing, but delivering and living scale is something entirely else. And so let's switch to your team, a critical component of any Simple Capital investment evaluation. And let's see who you've got. Who are your rock stars?
Yeah, absolutely. So I'm really proud of what we've built as a company, but of all the things we've built, our team is one of the things I'm most proud about. We're about 15 full-time equivalents at the moment, about 30 people in total. And this is engineering, operations, and growth people. On the slide that's showing now, we've highlighted a few of our executives and advisors. So personally, my background is I used to lead Google's energy business in Africa, which involved financing big renewable energy projects and developing technology in the energy access space. My co-founder, Kalis, and our chief growth officer, previously led Discovery Vitality's North American business. And for the non-South Africans on the call, Discovery Vitality is one of the world's most successful fintechs in the behavioral change space. Arnu, our chief operations officer, he effectively built the operations over the last 10 years of South Africa's most successful energy service company, and is now repeating that for us. And on the advisor side, also amazing people. Our ML advisor previously led IBM Research's energy team in Africa. Our product advisor is a senior leader at Stripe, previously with Facebook and Google. And our financial advisor is currently the head of climate investments at the Walton family office, which is Walmart's piggy bank. So really great team that brings relevant experience from some of the world's top organizations.
John, absolutely fantastic. You've got a real scorcher here on your hands, and it looks like you've got the rockstar team to help you support in that. When I look at this and I see Google, Discovery, Energy Partners, IBM, Zappos, it's almost too good to be true, something to be really excited about. We wish you well on your journey. We thank you for spending some time with us this evening and doing a small expose of Plentify. And we look forward to our next encounter with you, where we can further showcase and join on the growth journey of Plentify. Thanks so much for joining us tonight, John. Much appreciated.
Yeah, thank you, Willem. Thanks for the opportunity.
Ladies and gents, just before I introduce the guy that does the heavy lifting at Simple Capital and makes it look easy, Blake Musgrove, who's our CIO, there was a question that came through on our chat or on the messaging part this evening. and it asked whether or not, and this is from Gavin, will Simple Capital Bundle be available on the Wealth Migrate platform? No, not this one. This one, you've got to scan this QR code for Gavin that we've put onto the screen. Thanks for asking the question. And your smartphone should take you through to a page where you are able to input your details, such as to be able to participate. There's a Google form that sits behind it. And that's just because of the nimbleness that we had to execute in the speed of getting this to market. So thanks for that question, Gavin. I'm going to click here that I've answered it live. And if there are any other ones, ladies and gents, I invite you to please throw them at us and we'll weave them into the tapestry of tonight's story. But without further ado, I'd now like you
Willem, just before you go there, I think it's just important to acknowledge that we want to go through that process and allow people to go through the full process and do it on platform. We had a meeting this morning with Rian, our CIO, but it wasn't possible in terms of the timeframes of what you're looking for this bundle, as you said. But certainly I want to, and one of the reasons we're doing this webinar is to work with Simple Capital going forward from a global wealth group perspective. Even in terms of our own bigger picture plans.
Scott, that's right. And I don't want to skip over the context. So forgive me if it was in second gear as opposed to third gear. In the venture space deals, these companies move fast. You can see just from the two founders that we've met tonight, ladies and gents, they're not sitting on their hands. They're capitalizing on opportunity that sits in front of them. And these deal terms aren't open like M&A or private equity deals for months on end. You really have to have nimbleness in your structures and your reaction capability set. So when they come, you've got to move. And we'll work hard with Scott and team to make sure that our next set of bundles will be able through the platform. This one though, round one, we're all picking up some learning curve. All right, then the much anticipated Blake Musgrove is on your screen. Blake, you are in the East Coast. You haven't caught a flight that I'm unaware of, right? You're in Ballito, Salt Rock.
North Coast, KZN, where it never gets cold, although I am wearing a jersey this evening.
That is an anomaly. I was wondering if you were trying to be formal or if it's actually cold by the North Coast. Blake, welcome and very nice to have you. You are going to talk us through YeboFresh first before we get into Moment. And so let me ask you to kick off immediately with YeboFresh. Give us an overview of what YeboFresh does.
Sure. Good evening, everyone. YeboFresh is a business we're particularly excited about. It's a online grocery platform focusing on South Africa's mass market, which is the township market. You can see quite a stark image, which is actually in Hart Bay, where Jessica Boonstra, the founder of the business, lives and started the business literally from her garage. And I think this image just shows the opportunity within the township market. I mean, 26% of South Africans, and I think it's actually higher than that, live in townships. Gigi Alcock, who is the author of Quasinomics and a board member of the business, estimates about around 196,000 spaza shops and an FMCG market size around 160 billion in South Africa. So it really is a massive market, and Jessica saw this opportunity. So she started delivering to Imiyazo Yetu, which is this township that you see, literally from her garage. And the value proposition is delivering high quality fresh food into the township market. In time, obviously margins in online food are tough. So in time, they'll look to distribute more FMCG products. At Simple Capital, we look for massively transformative purpose in businesses, and there's no doubt that this business ticks that box. Jessica herself has a passion for Africa and looks to reduce the Gini coefficient. And basically, if you just think about someone who goes to get their monthly shop, the pain points they have to go through, crowded transport, heavy goods that they have to bring back. And YeboFresh basically solves all these problems. So,
Blake,
sure.
Sorry, I was going to jump in and say, the purpose part, obviously, as you had mentioned, is a very strong consideration for Simple Capital, but often we see businesses that have got great purpose, but there's no real growth or business model behind it. Tell me, how has the traction been in this endeavor of Jessica? So great purpose, but how is it actually going commercially?
Yeah, so the business only really got going in 2019. And by 2021, they generated about, that's February 2021, they generated about 36 million Rand in revenues. As you can see on this chart here, they got a real boost from COVID, where they basically assisted NGOs and charities in emergency food relief. So those are the columns in red, but you can see that they've actually built a really sustainable and exponentially growing non-emergency business. So the business today is basically 95% organizations and 5% individuals. 85% of the organizations are NGOs, so think Breadline Africa. So they work with about 11 NGOs and spaza shops. But certainly the direct B2C market is growing exponentially. So it's about 1,000 customers monthly, 250 sites delivered for NGOs monthly, and 300 sites delivered for FMCG brands monthly. So proper traction. They expect to break even from an EBITDA perspective in 2024, investing heavily in growth until that point. They've got about 2,000 accounts and 550 SKUs, different SKUs that they deliver. So proper traction, proper scale. They now deliver into 22 townships across the country, 16 in the Western Cape, 6 in Joburg. They launched, obviously, you know, they've had more operating time in the home market of Cape Town. But recently in May 2021, they launched their second distribution warehouse in East Rand in Johannesburg. And already they're seeing proper traction there. So 280,000 in monthly recurring revenues. So super excited about the business. And part of this raise that they're conducting is to scale. And in online food delivery, you need scale. And so late 2021, later this year, they'll be launching in KZN.
Blake, so I mean, we're super excited about this opportunity because it is a little bit earlier stage than the other two entities that we'd seen tonight. However, the purpose has proven that there's a viable business model behind it. And if we look at the size of the opportunity in the typically underserved market in South Africa, because of the perceived difficulty in getting into delivery, it looks like this outfit has cracked it. And so we also know that there are some serious retailers in South Africa on the prowl as regards YeboFresh. Now, let me ask you, Blake, to switch gears. Let's go to our next enterprise that we're looking at this evening, which is Moment. And I will caveat this by saying this one is a very interesting one, specifically because of the industry that it plays in. Is that not right?
Yeah, so I bucket this as very early stage. I mean, the business has been operating for 3 months, so it certainly is earlier and more speculative in nature. However, we are super excited about the space. And it's, you know, NFT is the hot word, it's the buzzword. So non-fungible token. So essentially, Moment is a social media NFT marketplace for both creators of digital content as well as collectors. It's ad-free and it's got a social media. It is a social media platform, so you can buy, you can share, and you can trade digital assets. So essentially, NFT technology allows you to put a fingerprint on a piece of, you know, digital work. And so the benefit for creators. So if you just think about a influencer with, like, call it 10 to 200,000 followers. You know, typically that's not enough for them to do what they do full time. And so what Moment allows them to do is to set prices on their first edition of their work, also earn royalties in perpetuity, and also allows, you know, a broad array of creators to view their work or put their work on the platform, from art to sport to history. And the benefit for collectors is that they can actually claim ownership of this digital realty. And they can contribute to their favorite creators, and they can make money. So typically the second sale of a piece of, you know, digital art typically goes for 50% higher price than the first sale. And so there is an economic benefit for collectors. And unlike a lot of competitors, Moment doesn't just accept cryptocurrency. You can actually pay in normal currency. So how does the business work? So essentially, it's transaction-based. And what you see on the screen here, they earn 15% commission for the first sale of a newly minted piece of digital property. They also take 15% on any tips that collectors give to the creators. And then the 5% is essentially in perpetuity. Whenever a transaction is made, 10% goes to the creator and 5% goes to Moment. And so, they've been operating for 3 months only, and they've actually made some decent traction. So they've had about 30,000, it's now 30,000 gross transaction value on the platform. So they'll obviously earn a blended commission on that. They've got 2,800 monthly active users now. Over 550 NFTs have actually been purchased, and it's a low value, high volume play. So on average, the NFTs that are purchased are about $13, but they can go up to about $250. But they've got a lot of creators and high profile creators on the platform. So about 200 creators. And a piece of tech that they've developed allows these NFTs to be what they call minted on the platform. So that's, just think of it as the fingerprint stamp that's now on the blockchain. So you can trace all future transactions for this piece of digital realty. So 4,700 collections have been minted on this platform, and they do it for free, whereas competitors are anywhere up to $200 to mint. So their projections for growth, they want to generate about $320,000 for the coming year ahead in terms of revenue. And yeah, I mean, the market is massive. So it's 2.5 billion in NFT sales globally in the first quarter of this year. This compares to just $14 million in the first half of 2020. So those numbers are quite staggering, and you can see why it's the top of the Google hits or Google search, and it's the buzzword. So just quickly on the team. So just to, the slide that's been brought up here. So Aaron. So essentially, there's 4 co-founders. Aaron's background, he was in security applications for Jumo, and he's been a security consultant for some of the major banks and telcos. And then another notable investor, billionaire in South Africa, Rob Hersov, is the chairman and co-founder and one of the co-founders in the business.
Okay, Blake, I think there are going to be a lot more hits on Google after that as regards what is an NFT, and people will ask the question. And I suppose what really excited us from a Simple Capital perspective was the fact that there are so many use cases for buzzwords like blockchain and cryptography. And finally, we're starting to see the emergence of actual business cases that are globally scalable. The first tweet of the founder of Twitter was minted into an NFT and was sold for $3 million, which baffled me because I would never buy something like that if I had $3 million to float around, but someone did. And so that was interesting to us. The greater macro trend, which you would have also heard me talk about in the Exponentials world, is the fact that blockchain applications as regards digital fingerprinting is going into a variety of different industries, 2 of which I'll touch on now. The first is voting. So if your voting right were a token on a chain, could you have indisputable elections worldwide? And if you think just north of the South African border, and perhaps in South Africa itself, that would be a very valuable application. And then I saw an interesting green shoot where we all know who the best selling authors are of those books that we buy and that make most of their time on our bedside tables without having been completely read. But who is the world's best read author? And so I'm seeing digital publishers starting to utilize blockchain to track per page that you read and also pay per page that you read. So you don't pay the $20 for the book that you read half, you only pay as you go. So interesting global applications of blockchain and cryptography and digital minting that's coming to light. Blake, thanks for joining us this evening, and thanks for a very concise depiction of these other two opportunities where the founders unfortunately couldn't make it this evening. Thanks for joining, Blake. You are, if my understanding is right, sticking around for the Q&A session, because I can see there are a couple of questions coming through at the end, which may pertain to your skill set and area of focus. Thanks, Blake. Ladies and gents, just as we head into the final stretch of the evening, let me switch over to Tim, our Simple Capital CEO, who you met earlier this evening, because now these four entities are bundled into a single investment opportunity that QR code on your screen gives you access to. Tim, won't you just talk us through how we've made up the bundle, please?
Great, thanks, Willem. And yeah, super exciting to always hear from the founders and talk about these investments. So we've got 4 investments in this bundle. And you can see these companies span from quite later stage, like SweepSouth to much earlier stage like Moment. And we really believe that diversification is super important for all investors. So when you get involved in the VC space, exposure is really, really critical. And that's why we like to bundle a group of companies that we believe in, but also provides that diversification to the investor. At the moment, we are proposing an investment of an equal amount of $75,000 into each of these companies, subject to our final sign-off from our investment committee. And you can just see the different round sizes. So for instance, at YeboFresh, we're going into a priced equity round, and we've got a round size of $3 million on an valuation of 8. At SweepSouth, we're investing into a safe note. And I think a safe note is something that maybe not everybody's familiar with. So I'll just take 2 seconds to take everyone through it. But it's basically an instrument that was developed by Y Combinator, which is one of the most successful accelerators in the US. And it's a simple agreement for future equity. So you basically don't decide on the valuation with the founding company or the investing company at the time. You invest and you traditionally get either a discount or they cap the valuation. And then when the priced equity round happens at a later date, the valuation is determined. So it's much easier for everyone involved because valuations of companies that are unlisted are often difficult. So it makes it quick for companies to raise money, but it also provides significant upside to investors as they get this immediate kick from when the investment converts to equity at the priced equity round. So with SweepSouth, we've got a 12.5% discount. And then on Moment, we're also investing in a safe note, and they've got a 20% discount. So you can see that both of these options have discounts. And then Plentify, we've got a safe note as well with a valuation cap around the $12 million mark. So that is what we're looking at there. And you can see that this is an interesting bundle of investments when you put it all together.
On the next slide, you've got some terms, which I think is going to address a question that's just popped up on my screen, which says, how does Simple Capital make its money? Very fair question, very transparent to do so. And I think you're addressing it sort of in the bottom third of this next table.
Correct. So I think firstly, you'll be investing in an entity called Simple Capital Limited. It is a special purpose investment vehicle in the United Kingdom. And the entity manager is Simple Capital Partners Limited, who executes and performs all the operations on behalf of Simple Capital Limited. You'll be investing in a class of preference shares called Type E, which have exposure to these 4 investments. So they only have exposure to these 4 investments, and the returns from these 4 investments go directly to these preference shareholders. The minimum ticket size is $1,000, and we go up in increments of $1,000. You can invest as many $1,000 tickets as you choose, but the minimum is $1,000. We're aiming to raise around the $300,000 mark in total to put, as we noted, about $75,000 into each of these investments. And then I think there was a question around fees. So we charge an upfront subscription fee of 5% on the total investment amount, but we have no annual fees. So in a traditional private equity or venture capital model, you will hear about a 2 and 20 model, That's 2% on your invested capital per year and 20% carry. We actually, by year 3 with Simple Capital, you are actually in the profit because you would have paid 6% in year 3 and you've only paid 5%. So often these investments take, between 7 and 10 years to mature. So you can see that I think that's quite a good discount on the price of the subscription fee there. And then the final one is a performance fee. So traditionally this is called carry, but basically what happens at Simple Capital is that we firstly, when there is liquidity from these investments, we firstly return principal and fees to our investors. So you get back your capital and your fees first, and we then split the balance of the proceeds, 95% in the investor's favor and 5% to Simple Capital as a performance fee. So those are the only 2 fees that you'll incur during your time at Simple Capital.
Tim, thanks very much for doing that. I want to just make it super practical in 30 seconds. If an investor were to come along and put money into one of these exponential bundles that we have, and let's say they put 1,000 monetary units in, and 5 years later, there's a buyer of the underlying company, and that thing returns 10,000 monetary units. Just talk me through the numbers to make it nice and tangible for people. So they put 1,000 in, and when the company that was invested in sells for 10,000, what happens to the 9,000 gain?
Yeah, sure. So the first thing that would happen is that the first thing that would happen is that we would return the $1,000 plus the fees, which would in this case would be in the region of $50. So we would return $1,050 to the investor, and that would then leave $8,950, which we would then split 95% in the investor's favor and 5% in Simple Capital's favor.
Okay, brilliant. Thank you. And then I see that Patricia, thank you, Patricia, for your question. It is how long is the investment term? And I think it's important here to differentiate between assets under management, which we are not, versus buying pref shares into this investment bundle. And so, Tim, from your experience, the world of venture capital, how long, I won't ask Scott Picken how long is a piece of string, but how long is an investment term in the VC space, typically for those folks that aren't necessarily part of this fraternity that we're trying to illuminate this for?
Yeah, so we are targeting probably a 7 to 10 year investment horizon. However, one of the key reasons why we chose to accompany structure is that if during that period you decide that you actually want to trade out of this investment, you can find someone who might want to trade in, and we will facilitate as Simple Capital the valuation of the shares at that point and help you transfer them to the incoming buyer. So it's much more difficult if you're stuck in a funds situation because it's a limited partnership. Whereas this is a preference share is basically an instrument that you can trade. It is unlisted, but you will be able to actually trade that at a later stage if you chose to. So we're targeting 7 to 10 years. As soon as any liquidity comes into from any of these investments, whether it be a dividend or an exit event, that those funds will immediately be returned to the investors. But if that doesn't happen and you decide you want to trade out sooner, you can find someone who is interested in these investment terms and get in touch with them, and we will help facilitate that transaction on your behalf.
Okay, Tim, thank you very much again, making complex things seem simple and the heavy lifting behind that. So thank you. It's no wonder you called this company Simple Capital. Nice to see you tonight, Tim. If I could ask you and Blake, perhaps just to hang back, I see that we also have Aisha and John still on the line. And so, Scott, perhaps as I venture back to you, the call to action, if you're interested, is scan the QR code, get in touch. But we also did say that we'd have a Q&A opportunity or an Ask Me Anything opportunity. We have some founders. We've got Blake as representative and CIO, and we've also got Tim online. I have 2 cents worth. So perhaps there is a gap to just see if there are questions from our community, and Scott, or perhaps even from you, before we start to close out for the evening.
Well, there's a question here from Graham who's asked, no figures for Plentify. Is it patented?
I can jump in there. So I suppose we haven't included figures just due to NDA. But what I can say is, Plentify has a stellar list of clients. So within the municipal space, the city of Cape Town is one of their clients, and they have the largest short-term insurer in South Africa as one of their clients, with a number of very high-profile clients in the pipeline. So that's all I'll say on that. And then on the patents, they don't actually hold patents. However, all the hardware and software has been developed in-house, so that IP remains in-house. And so they can consider patenting in the coming months, but they have not done so at this point. Okay. But the proprietary technology sits within the business.
Yeah, I think from, firstly, thank you for the presentation. I really enjoyed it, seeing 4 different aspects and what the companies are doing and how simple.Capital is both involved in them. I think if anyone has any questions, just fire them away. Graham, thanks for asking the questions in terms of, what you've put there. And one of the things, Willem, that I think is important is that if someone's interested, they can fill in the form and then reach out and have a conversation with you guys at simple.Capital. So my suggestion is that people, even if you're not sure, so you might say, and by the way, I've done it. So, and the point is you fill in the form and then you might not be committed 100% yet, but you want more information, you want to talk to the guys at simple.Capital, well then, fill in the forms, at least you can talk to it. Someone said, what is the minimum amount to invest? It's $1,000, as I understand. And another question here is, can one choose which company to invest in? I don't know if you want to answer that, because my understanding is that's the benefit of the bundle.
Scott, 100%. We don't do cherry picking. That's actually a frowned upon practice in this sort of arrangement. We've curated literally tens and hundreds of entities that we've taken through evaluation, fit for mandate, exponential tick-off list, and we've ended up with these 4 for this bundle. And so should a participant tonight decide to get involved, it would mean that you get involved in the bundle as presented tonight, which is that split that Tim had alluded to of all 4 of the companies. So you buy a single pref share, but it then is invested into these 4 underlying companies as a single bundle. So you can almost think of it as the unit trust of VC without the fees of a normal unit trust.
And well, there's a question I got for you, which is actually comes from a conversation we had this morning. Now, venture capital is something that is quite new to a lot of people, although it's become quite a big thing all over the world now, particularly in terms of private equity and people understanding it. You were talking this morning about one of the changes that's happening around the world as people are getting older, and the need for a balance of investments. We do a lot in our world around portfolio planning, but a balance of investments that could be longer term. In the past, if people were talking 7 to 10 years, most people would have a heart attack. But talk to us just in terms of how the world is changing, why those time frames are important, and why you're also starting to invest in where this next decade's going and even the decade after that.
Scott, I think there are 2 main forces at play for this part of the conversation. The first is a generational shift. People talk about the Gen Zs and the millennials and some such, and we find that there's a behavioral shift towards assets where, as one example, youngsters aren't buying homes, they're renting homes as they need them. So the almost gig economy associated with how they own assets. And that macro trend is looking for purpose-driven organizations that they can both support commercially as well as invest in. So it's a pronounced theme where this awareness, or as they say in Cape Town, the awareness of these mission-driven enterprises is coming to the fore. That's the first. The second is that longevity is a thing. We see that in the digital biology and exponential medicine world, longevity is starting to stretch. The usual model was go to school and learn for about 20, 25 years, work for about 40 years, and then retire off the earnings of those 40 years for about 20, 25 years. But as longevity starts to stretch, we find that the period post-retirement is starting to increase, which leaves an insufficient amount of funding from the 40 years of work in the traditional or legacy asset classes. And so now people are looking for higher return over medium-term type assets. And the problem with finding a VC deal is that if it's not in your KPIs, or you don't have the network that a Daniel Swich has cultivated all over the world for the likes of a Simple Capital, where are you going to find a deal? It's not a thing that's easy to come by. Founders don't come to you for money because you don't typically hand out money. So the chicken egg scenario precludes you from access to deals, first of all. Second of all, if you did get a deal, how the hell do you evaluate it to make sure that it is an exponential growth opportunity? So there's a particular skill set which Blake has scratched the surface on tonight that needs to be applied. Third, you'd only have one deal. So if that deal tanks, your risk is concentrated. So how do you get this sort of unit trust? And that talks to Graham's earlier question. And then, of course, you need to be able to do this at a fee structure that makes sense. And so that's what Tim and the team have put together. It takes account of these macroeconomic factors vis-a-vis longevity and generational shift and focus. And at the same time, it makes it commercially viable. So Tim's mission is democratizing access to venture capital.
Brilliant. My last question in terms of the way forward is that, you know, you and Tim this morning, we were talking about it. You know, one of the things that I would love to do for our community, and I'm just conscious of the time here, and I'm amazed that actually everyone stayed online for the entire time. So obviously you're doing something right in terms of keeping people interested. But we did speak earlier around people and some of the trends and thoughts that people want. My one request to people within the community is reach out to us either on our WhatsApp groups and or put it in the chat box now. But what I'd love to know is, like, what topics and trends would you like to know about? You know, so many of you have watched great webinars with Willem specifically around exponential technologies and how they work, and the EXO and how that operates. But what trends and things would you like to know about? And I'll tell you why. This is important, because what you and Tim and the rest of the team are looking at, Willem, here is what are the investment trends and where the opportunities lie. And that, you know, people should be correlating that with the information and the knowledge they're looking at. So again, I want to go back to crowd participation here. Let us know, what are the, you know, put it in the chat box. Let us know, what are the trends that you're wanting to know about. I certainly, you can see here that I've written it behind in terms of Wealth 5.0. We did an amazing series last year with Willem and a number of other incredible speakers. And, you know, believe it or not, we're back at that time of the year again for 2021. And, you know, I want to bring out a series where we're looking at these things and then tying it up. You see, what I love about Simple Capital, and with time, you know, our own investment platform, is that Simple Capital's deals can be on our platform. And what I love about that is it ties people, gives people opportunity to get the knowledge, but actually to take action. And, you know, if I look at it, Willem, for the last 4 years, traditionally you've spoken, you've given people all the knowledge, they kind of walk away. Often people say it's like drinking from a fire hose. It's like, oh my word, all this information, what the hell do I do about it? And now we're starting to get to the business end of the operation where people can actually take action. Unfortunately, at the moment, it's not on the platform, but, you know, I'm going to commit to kick your and Tim's butt to get you properly on the platform and fully qualified and everything, so that these are actually going through the platform, because that would make it a lot easier for people. But I can see people are putting, you know, on stuff here. Interesting panel. Thanks everyone. More on NFTs. Was great to have you online. Oh wait, that was, love the concept. Product development team. So just comments. But yeah, if you, as I said, reach out to Lee even in the community, or put it on the chat groups. Lee and I are actually meeting tomorrow to really start to evolve what are the topics going to be for Wealth 5.0. So and certainly my intention is to have you and Tim sitting front and center, and maybe others that you recommend from around the world in terms of what these trends are. Because I want to repeat what I've just said. There's one thing to have knowledge, but actually to be able to participate in them is a separate thing, you know.
Scott, 100%. That is one butt kicking that we welcome and look forward to. So thank you. I might just close out with perhaps one question that's just popped up here, which is, I know it's early days. This is from Mohammed. What are the annual expected returns or the capital growth, or is it capital growth driven? Mohammed, and for everyone else that wondered, absolutely, this is a capital play. So early stage companies are not in the habit of paying out dividends. They're in the habit of growth and returning balance sheet value. And so that's why typically exponential organizations that do this really fast do it in sort of 3 years. Those that are medium term, sort of 7 to 8, and then there are obviously how long is a piece of string on the other end of the scale. The returns that we look for, just give you this. We can't commit to returns because we will do everything in our power to help these companies grow. But in world terms, VC typically delivers between 38 and 45% annually. So call it around 40. That means some lose your money and some give you 80%. And I can promise you we're not in the habit of aiming at the lower end of that spectrum. Okay, that's it from me. I'm getting off the soapbox. To Aisha and John, thank you again for joining us. Tim and Blake for taking the time out. And to Lee and Scott, thank you very much for letting us be a part of this community. It really is great to work with you guys. And again, well done on the nimbleness of pulling this together within VC window timeframes, which we know are very tight. We sincerely thank you, and we look forward to our future collaboration with you.
Awesome. Well, thank you very much to you and your team as well. Appreciate it. And for those on the community that have stayed on the webinar till this point, really appreciate it. Hope it's added a lot of value to you. Look out for more webinars that we're going to be doing with Simple Capital. Also, a reminder that next week we've got Clem Sunter, probably one of the most respected people in terms of the world, in terms of scenario planning. So come along and understand what he's got to say next Tuesday evening in terms of scenario planning. And then for those of you who are shareholders in a high growth, exponential, purpose-driven company, Lee also put out a notice today of our AGM, which is the 25th of August. So if you're not a shareholder, watch the space. But for those of you who are shareholders, we call them wealth partners. And as I said, I'm going to not only kick butt to get Simple Capital in and onto our platform, but actually to be a lead investor in further capital raises with us, because I'm not only interested in the capital component, there's lots of capital out there, but I'm interested in what they call smart capital, which is using Willem, Tim, and the rest of the team to really help us unlock this exponential opportunity. And that's why I thank you, Lee, for putting this together tonight, because we like to be in the same playground as great people. So thanks for your time, everyone.
Thank you everyone for joining us. To our panelists, it was great, as you can see with the comments coming in. So thank you everybody. We really do appreciate you. To our community, who is our gold, thank you for spending the last hour and 20 minutes with us. It is greatly appreciated. If you missed the link to complete the form, please reach out to me. You do all have my details. I will happily give you the link to the form so that you can get in touch with the team from Simple Capital. And to John and Aisha, we wish you everything of the best in your future endeavors. May you fly the flags of exponential technology high. Thank you, everybody. We look forward to seeing you on our future webinars. Take care.
Cheers, everyone.
Thank you. Cheers.